Choosing a lender can be confusing. How do you decide? Let's take a look at 5 key factors to consider. First, knowledge is key. Are they familiar with all the mortgage products that could be available to you? And are they familiar with the real estate market you're looking to buy in? They should be walking you through the different types of programs that fit your needs and apply to your market. Are you buying in the city, the suburbs, the countryside? This can be a reason one product makes more sense than another. How much do you have for down payment? What is your household income? All factors that play into these decisions. Number 2, do they pre-underwrite? This is one of the most important things when buying a home in a competitive market. What this means is that the loan officer is having you take a full application, providing income documentation, assets, reviewing credit, etc., and then submitting the file to the actual underwriting department. The underwriter is the person that actually approves the loan, not the loan officer. A pre-approval or pre-qualification means that the loan officer may have viewed your application and possibly your documentation. However, they do not make the final say. Sellers and listing agents want to know that you've been pre-underwritten and that the person making the final decision has actually approved your loan. This gives you the most competitive advantage when dealing with a multiple offer situation. It makes you look the closest to an all-cash buyer. Number 3, communication and accessibility. Nobody wants to work with someone that is hard to get a hold of. Real estate is often done outside of typical business hours and on the weekends. You want to work with a lender that communicates well and is flexible and works closely with your real estate agent. Number 4, reputation is important. Similar to having a lender that pre-underwrites loans, local reputation is just as important. Do the real estate agents in the area know the lender? Specifically, do they know the loan officer? Listing agents want to know who they are working with. An offer is only good if the lender can actually close the loan and do so on time. Listing agents will often guide the sellers to take offers that have pre-approval letters from lenders they know versus the ones they don't. Rates and fees. Payment and costs are super important. I'm not sure anyone out there prefers a higher rate or higher payment, higher costs. However, make sure you're always comparing apples to apples. Cost worksheets can be confusing, and sometimes the deal you think you're getting isn't what it seems. Lowest rate is not always the most important factor. What are the costs associated with that rate? What's the cost of the private mortgage insurance for the program if you're putting less than 20% down? Many factors to look at. Working with someone that has a good reputation and that you trust is crucial in navigating through this decision.